Good afternoon, everyone. It's Richard Faulkner here again for Forex Investments. I'm just going to go through this euro pound trade. We're going to jump straight into it and show you exactly why it's been taken, what we're looking at, and where we're looking for the market to go. So the best place to start with is on the daily time frame. Now, if you look at the daily time frame, it's very clear to see that we're trending up. Now we have had a retracement, and we've broken this trend line, but regardless of that, it is still, the longer term time frame is still very much in a uptrend. So how do we determine where a turning point is going to be? Well, let's just take a fib, put it on, and you see the latest swing low, swing high coming in at 78.6. 78.6, this is my favorite place to start looking for a reversal. So let's jump down to the 1 hour time frame. Now, good indication that the market's going to reverse is if we have a break of a trend line. If we look here, you can see there's a trend line here. We pop up, reverse, reject, take any stops there are, come back down, and then move back up. So this is the first indication that the market is going to reverse. And that's what you're looking for. You're not necessarily taking it on the break here, because you obviously can go through all this drawdown here. We're looking at 10 pip stops. So if you're taking it on the break here with a stop below here, you're looking at a 30 pip stop, which is too big, especially on the euro pound. So we are obviously looking at this particular break here is an indication that the market's going to reverse. Once we see this, this is when we start looking for stops. So we've got the 78.6 fib, we've had a reaction off it, and now we've come back down and the market's generated some stops. So how do you find the stops? Well, very simple. Jump down to the 15-minute trend line, time frame, sorry, and if you saw the pound Swiss video I put out yesterday, stops are generated by levels. So if you can see here, we've got levels, we've got a level there. I didn't take this one. I like to see a stop that actually goes a bit bigger. But there's your stop. There's your reaction. 35 pips. Oh, tiny stop. Like I say, we didn't take that one, so that's by the by. Where's your next level? Well, your next level's here. And this was the key level. This is what we were looking at. There's your stops. There's our entry, and away the market goes. So closed out, and where you know it's where did the market have a reaction? Well, the last swing high. I mean, that's where the stops are. So we saw the market came up, started holding, started rejecting a bit, so we closed half our position out here. This was our position that was held overnight, and I wasn't really prepared to hold it and see it come all the way back down through here. So we just put a limit order in, and obviously got stopped out. Now, where's the next bunch of stops? Well, there's your level, and there's your level. I mean, it's just once you see this, and once you know how to trade this, you're going to ask yourself, why am I using a 30 pip stop, or why have I been using a 40 pip stop? The reaction you want out of a stop level is going to be swift, and it's going to be hard, and it's going to be fast. There's no point hanging around for 3 hours in a stop level. If that happens, the market's going to roll over, and it's not going to go your way. If the stops are taken and you're getting a decent reaction, then you know the market's going. There's no question about it. There's no point of having a 30 pip stop. I mean, that's our 9.7. So your stop goes below the stop, and once you've had the reaction, but that's a 10 pip stop there. That was a 5 pip stop there. So on that one, that was half at 42, half at 37, split the difference, call it 40 pips. That was 4%. We've taken this one here, which it's been fairly short-lived actually. It's 14 pips, so It's 1.4%. The reason this was short-lived was we got a fairly decent reversal out of that break of a new high. And if you are trading breaks of new highs, just stop doing that. That's you're going to dwindle your account away in no time. In absolutely no time. It's a disastrous trading strategy. I've seen it done. I've been in a lot of trade rooms where it's done, and it is a terrible, terrible idea. So that's just my opinion. But if you're trading the breaks of highs and lows, it's going to be difficult to make money. You'll never get a 10 pip stop with that trading strategy. So anyway, we break the high here. Stops obviously here. Reversal bar here. Came out a bit late, but that gave us 14 pips, 1.4%. To add to the 4% from, let's call it yesterday. And obviously, if you watch the pound Swiss, we had this trade here, which again, very, very simple. Stops, entry. That was something like I think, well, we had well, there it is, a 6 pip stop, 2.3%. So we're knocking on about 10% in 2 days here. And obviously we were talking about this level here, previous stops below. Get rid of that. Stops below here, I mentioned in the video, we're probably going to go and make new highs. We did go and make new highs, albeit by about half a pip, and we rolled over, and it looks like we're going lower today as well. But like I say, if you are interested in learning how to do this and how to have a 10 pip stop, then come and check us out on Facebook. This is our Facebook page. It's Forex Investment. We are an education service. We are a management service as well. We do manage people's accounts. All our trades are put on this page, as well as some trade signals prior to the events, and obviously any economic news we think that's fairly significant in the market. If you are interested in learning to trade like this, send us a message, get involved, like our posts, and we'll get back to you as soon as possible. That's great. Okay, thanks for listening. Cheers. Bye.